Good evening, everybody. Kind of a winter evening here in Pittsburgh, except it's warming up a little bit. Chicken Hawk, how are you doing? Even getting a little bit cool down there in Houston. Okay. Oh, I think CB has no sound every night. Becky, could you just type in for CB to go up and click on the red X and come back in again? Uh, okay. We're going to be kind of oriented. We've got a 2-day training coming up Saturday and Sunday. And this is kind of um, what I want to say, the keystone training for candlesticks. And the reason we kind of recommend it is if you understand or if you recognize the signals and you recognize the patterns and you understand the psychology that created those signals and patterns, that's it only works in Pennsylvania. Then you've got a grasp on what moves prices with a high degree of probability with the same kind of insight as somebody that's been trading in the market for 50 years. So the one most prominent factor of price movements is price movements move based upon investor sentiment, not fundamentals, not market action. Those are all created by investor sentiment. So if you understand or you recognize how to use the signals and patterns, what that leads into is that you can start fine tuning your probabilities of being in a correct trade much more accurately because you can see what should happen after a signal or pattern breakout one way or the other, knowing what the probabilities are based upon how they set up and or how the pattern set up and where the breakout levels are. So the reason I say this is because people say, well, aren't all of the in a bull market like this, isn't everything going up? Pretty much. But there's two elements to that that kind of diminishes most investors' returns. One, they might have a portfolio of, let's say, 10 positions, and they've got 6 or 7 going up and 3 or 4 going down. And I'm talking from what I hear people say, plus I did it myself years ago, so I understand fully where they're coming from. So if they've got 3 or 4 going down, what's the normal thinking? Oh, these will turn around and head back up. Well, here you've got a uptrending market, and your returns are kind of moderate because you've got some good bullish positions, and you've got others going the other way. And secondly, the bullish positions are going up in kind of a steady market trend or a steady trend because all boats rise in a rising tide. What we have as a benefit with candlestick analysis is 2 things. First, we can analyze when we should be out of positions immediately if they're heading down. So that means you're constantly cultivating your portfolio to where you're putting yourself in positions that have high probabilities of heading up. And 2, the ones that you're putting yourself into have much higher profitability because they're not going to just rise solely with a rising tide. they're usually going to be the patterns that break out and produce exorbitant profits. So that was a long dissertation to say, um, CB, aren't you in here during the day in the chat room? It shouldn't be any different as far as your sound. Make sure your microphone or your speaker is up. Oh, you can't hear me. That's kind of goofy, isn't it? All right, he'll figure it out. So what we're going to look at right now is why we're in positions. And again, I went through this for years as a stockbroker where the market would be going up and my clients' portfolios were doing okay. That's right. They were doing okay because some of their positions were going up and some were laying flat, some were heading down. So it was always a case that if somebody's portfolio made 10% in a year, everybody was just happier than pigs in doo-doo that they had that type of return. Well, the cultivation process is very simple when we're using candlestick signals and patterns. So the first analysis is which way is the overall market going? And we could analyze what was happening based upon the breakout, and this was just over the last couple of months. There was a kind of a wedge formation that had formed 3-4 months before this. So we could see you had a J-hook pattern right at the breakout level. And how long are we in this wave right now? Or did we know there was going to be a wave? Well, that right there told us there was a new dynamic. And at this point, all we do is stay long as it stays above the T line. So one of the important factors that we kind of illustrate is you want to identify your patterns using the T line, which is kind of a natural support and resistance level of human nature, and use the information built into the candlestick signals, which are the graphic depiction of investor sentiment. When you combine those two, you've got an extremely powerful combination of knowing what's happening in your market trends or any trend. But if we can analyze that we're in a upward market trend, and I think if I could make this smaller, whoops, we can see what's happening here. Big price move, consolidation, now looks like wave 3. So this is why we want to be able to analyze what is happening based upon what everybody else is watching, because you want to make hay while the sun shines. So I'm going to go through some real quick just to give an illustration of the patterns that we're looking for, or we can identify, like the PTCT was recommended today, wasn't it? On the basis that if this started trading positive, make this even bigger. What was this telling us about our J-hook pattern? Bah, we're in wave 3. Now we're going to get to a series of how you utilize entry strategies to improve your probabilities of being in the right trade at the right time. So I'm pointing this one out because this one would be ready to buy, even though we didn't buy it today because it didn't execute, because it didn't show bullish confirmation. Now we have a doji, which adds to our analysis. Very simple logic, knowing the doji rule that it's going to trade in the direction of how they open after a doji. But if this opens positive and starts trading positive, we know it's probably trading positive, breaking this level, confirming our J-hook pattern. So what we're looking for, and we can easily scan for these type of signals using, we've already got the scan package for Metastock, TC2000, Thinkorswim. These are all things that are already built in that you can just download. And these, nobody provides the CQG. CQG was one of the original charting softwares years back. And as a matter of fact, it's the grandfather of most. You can, Wayne, email Abraham for the link so you can get the package. I think the scans are on TradeStation. I'm not sure because I don't use TradeStation, and I know they were working on that, getting all the information on a few years, or at least a year ago anyways. So here's why we're in GH, because we can see the J-hook pattern and we can see the best friend signal taking you up above the T line. So what's the trend doing? Well, it's moving a lot bigger percentage than just a mere steady uptrend that most most price moves are doing right now. I'm reading. I think yes, it's that Ninja. Ninja was one of the first ones that set up our scans. So why did this not execute? Because what were we looking for? Let's make this even bigger yet. Hold on. What were we looking for to confirm the bulls were here? It opened positive or started trading positive. Notice it opened here, kind of consolidated, did not really get back up above today's open. I'm sorry, yesterday's close. So it really didn't execute. Mostly futures brokers. Mike, I don't know. My conjecture is, oh boy, that it could possibly get all the way back up here. Let's make this even smaller. Back up into this range. Here's where kind of the indecisive trading started. So that'd be my first target. Will it get there in one fell swoop? No, it might take it J-hook patterns to get there. On these, hold on to your individual ones until till the end. PTCT. Yeah, we don't want to get. Yeah, there's a gap to fill right there. But anyways, what do we got going on? There's our J-hook pattern that we can see easily with a Morningstar signal, one of the 12 major signals. This is why learning the 12 major signals is like learning the ABCs. Now you can apply it to everything else. So PC opened positive after best friend 2 days ago. Isn't that confirmation? Well, there wasn't a best friend. It was more of a Morningstar signal. Big down day, day of indecision, third day here. Now remember, a best friend is a gap up. But what did this kind of tell us when we had a Morningstar signal right here on the T line and starting confirmation? There's wave one, there's wave two. Where do we anticipate wave three? The same magnitude as wave one. A doji, that's not your best friend. That's just a doji bullish confirmation. Your best friend is this, a doji gap up after a doji. Yeah, so wave one and wave three are usually the same. So that kind of same analysis is wave 1, wave 2, wave 3 should be the same magnitude as wave 1. Let me run through these because there's a bunch of things, kind of a J-hook pattern right here. That's why we recommended ironwood today. Notice what it did yesterday. Opened, consolidated, and then came back up in the J-hook type pattern. TC, opened, consolidated, came back up. Now you look for a positive open. Is it too late to get into JH? Probably not. But when you ask that question, it's a higher risk. There's probably more upside. But if this is a good trade to get into, where was it a best trade to get into? Somewhere down in here. Now, there's two reasons why we're looking for the buy signals. Because first, it allows us to get in early if the trend works. If it doesn't work, we know right away, and we're closing out the positions right away. Xavier, yes, I'll get to that after we get done. We got a lot to go through. So I'm trying to illustrate this is why we do our analysis. There's our slow curve. There's our best friend kind of doji sandwich breakout. That's our McMuffin, which is a morning star signal followed by a doji sandwich. Put us in the right trade at the right time. Where do you start taking profits? Maybe right here. And now what do you do with this? You got a bullish engulfing. You're getting ready for your J-hook pattern. Identify the buy signal on GH. Okay, third time. There's your best friend signal, a doji followed by a gap up. So not only was that a best friend signal, doji gap up, it was also telling us we got a J-hook pattern. And what was starting our wave 3 of the J-hook pattern? One of our strongest reversal signals, the best friend signal. So the reason you want to stick with a pattern is twofold. One, because it's got a high probability result that you're heading in the right direction. And two, the magnitude of the move is usually going to be very strong. That's Andy. This is also what we concentrate on. Where is our best place to start buying? Well, somewhere in here. But look what was happening. This is what we call the classic pattern, which we'll get to. Jake, are you not seeing this? Let me. Pan bottom J-hook pattern. GH. Uptrend, uptrend, uptrend. There's your little J-hook pattern. So with this little J-hook, this is wave 1, this is wave 3. Is a hanging man at the bottom and a gap up also considered a best friend? Well, Don, what is a hanging man at the bottom? There you go, a hammer signal. So there's kind of your little hammer signal. And started with bullish confirmation. So crisp, there's your J-hook pattern. Wave 1, wave 2, there's your J-hook. And what confirmed a J-hook pattern? We got extra evidence that they couldn't even get back below the T-line. Where was a good place to be buying? You could be buying here with the anticipation they're coming back up here. Or you buy on positive trading on the breakout, confirming. Yes, hold on to your individual stocks until I say, now you can do your individual stocks, or I'll tell Rick to do the double line. So we also utilize signals like the belt hold signal to confirm our patterns. In this case, kind of a fry pan bottom, giving us a good strong uptrend. Why not buying when price goes back? That is a better buy if you want to be more aggressive, yes. But you need to see a buy signal when it gets to the T line because you don't know if the next trade is going to be below the T line. CWH, another recommendation. There's your fry pan bottom breakout with a belt hold signal. Remember what a belt hold signal does for you. It pretty much eliminates a lot of sellers. So you've got buyer sellers, buyer sellers, buyer sellers, then bam. All the sellers come out, the bulls sop up all that selling, there's less selling in the way. Then look at what the trajectory does. It goes from here to here. So these are just common, what do I want to say? Common results of human nature. There's our kicker signal. That's why we recommended EVBG right about in here. Because after the kicker signal, what do we have? It didn't confirm. Now it did a left-right combo and starting back up. So that told you the initial profit taking was over. The strength of the kicker signal is now coming in. I know this is a lot of information, but this is why we do the 2-day training, is because we go from A to Z, kind of illustrating the normal price movements. Are we worried about, okay. At what point do you have to be concerned when it looks like it's obviously moved too far away from the T line? Which one were you looking at? Jules? Yes, would be a little bit concerned in the overbought condition. So it's going to do one of two things. If it opens positive tomorrow, it's still in an uptrend. If it opens lower, it's probably coming back to test this level. So we can do, if it opens lower, we take profits and then wait to see if it supports at the 200. T-line is in the middle. In this case, well, you're above the T-line. It doesn't matter that it's in the middle. So if I see a big belt hold bullish engulfing, what are we looking for? Very simple. We're looking for bullish confirmation the next day. All right, we're not even out of our this one was recommended because there's your fry pan bottom and there's your breakout. You could be buying right in here, knowing that you're right at the breakout area. And if you bought down here, which we did, because notice what this is another candlestick pattern. There's your little scoop pattern. Now, this is where you can start adding the different signals and patterns together, which is what I call 2 plus 2, where you can see that if you look at this, you've got a scoop pattern, and where's it occurring? Right here at the 50-day moving average and the T-line. So if it opens and trades positive, you can be buying because it's confirming your scoop pattern. You've got a doji sandwich after a left-right combo telling you you've got the prospects of more upside. How long do you hang on to this? As long as it doesn't close below the T-line. Now where is it? Well, you might take some profits up here because where do you think it's likely going to move to? Probably drift until the T-line catches up. The red moving average is the 200-day simple moving average. The blue is the 50-day simple moving average. Now I've simplified this chart. I also, and there, this 8 exponential is the T line. That's all you really need to trade profitably. Now, you can put other things on. Sometimes I put the 34 EMA or the 3 EMA, which we call the 3T line. But these are, the reason we have the 200 and the 50 is because every major money manager around the world uses those moving averages to make their decisions about their portfolio. We're just able to see exactly what those decisions are at those levels. Okay. All right, CB. So it doesn't matter what price stock you're trading. Tesla, when it did its big gap up, then it consolidated, and then notice where it consolidated to, right back to the T line. You could be buying calls in here, which we had a few people in the options room do that and doing very well with it. Roku, another biggie to trade. You could see when it did the doji and started coming up, where do you think your first target was going to be? Make this bigger. The T line. You wait to see what it does there. In this case, it didn't fail the T line. It keeps right on going. Amazon, nothing there. Notice the failure. There's your shooting star, kind of your failure. You could start shorting here. And how long do you stay short? Until you see a buy signal. J, let's see. Oh, yes, both the simple moving averages where the 8 is exponential. Now, a lot of people ask, why are you using simple? Isn't an exponential moving average more accurate? And the answer is, we're not analyzing what's happening at the moving averages, or we're not making our decisions. We're watching to see what everybody else is doing at those moving averages. Yes, so the blue is the 50-day simple moving average. Both, Bob. We kind of analyze whether the spreads are more logical or whether just buying calls or puts outright is more logical. And I'll try to get into. I'm trying to go as fast as possible. So here's Apple. Make this smaller. Notice when it broke out right here. How did it do it? It gapped up. How long do you stay in Apple? Notice the one thing that it hasn't done ever since it broke out of wave, this little wave. The never closed below the T line. Yeah, Carl, but again, we're not trying to analyze based upon using the moving averages. We're analyzing what is all the big institutional or big traders doing at those levels. That's where we analyze what the candlestick signals are telling us. Still showing Roku. Bert, are you seeing Apple now? Go up to the top right of your screen. There's a little red X in the circle. Click that and come right back in. That'll upgrade or what do I say? Refresh you. Okay, so this is what we try to analyze for everybody. Not analyze, teach everybody how to analyze. Look at this is what we call a message on Disney. Do we use the same? I usually use the same, Sean. However, you can use whatever works for you. Now, I've got my setups, which is, again, the 200 and the 50 simple with the 8 exponential moving average, and I also put the 3 exponential on. If you want to put other things on, test them. See if they work well for you, because we know the basis of the charts, which is the candlestick signals, are what works most effectively. So if somebody says, try the XYZ indicator, well, if you put it on and after a week or so you don't find it's helping, you take it back off. As you can see, I don't have very much on these charts because the most important criteria is the signals and the patterns. Now, I'm showing Disney because Disney consolidated today after a fry pan bottom breakout. The message is, this doesn't look good. People say, well, it opened and it's got a red candle. That's not very good. But the message was, they gapped this up. That told you there was a strong buying force coming in. And then it was profit taking. So if we know the message was there was a strong buying force, what are we looking for? We're looking for the profit taking to be over and the new buying coming in. Now look what's happened. Big price move. Is this reversal or is this consolidation? Makes it very simple. If this opens lower tomorrow, you take profits. If it opens higher, we recommended this afternoon in the options room to start buying the December 36 and 37.50 calls on DXC. Same scenario. There's your fry pan bottom, and look where your little best friend breakout occurred, right smack dab off the 50. Where do you think everybody is watching if they're watching this stock? They're watching to see what it's going to do at the 50. When it breaks out, what's it doing to our pattern? It's telling us the bulls have taken control. Then notice what it did yesterday. Did that little indecisive trading. When it opened and started trading positive, what'd that tell us? The profit taking was over. Now we're heading higher. So the reason I'm showing these are trade setups that allow you to take advantage of the expectation of what this price movement should do. Starts trading positive the next day, you want to be a buyer. There's your little doji gap up, confirming your fry pan bottom. These work for all time frames. I used to trade the E-minis off the 1 minute, 3 minute, 10-minute chart combination. Right now I trade soybeans off of the soybeans, cattle, the dollar off the 10-minute chart. And then I drop down to the 5-minute chart for my entry. So look what happened here. Another gap up, consolidation, left-right combo. What did that tell us about the consolidation? It was over. You could be buying this one. Zillow, same scenario. IGT. So this is now a gap up through the resistance level. Now we watch to see what it does from here. So this allows us to be at least educated on what to expect after a price move. There's your best friend. It started trading positive. It opened lower and came right back up. What'd that tell us? The bulls are still there. The probabilities are that you're probably heading higher. Okay, let's see. What am I looking at? That was these. Okay, so I guess the crux of learning the different patterns is look at TPTX, fry pan bottom. Doesn't really matter what the market's doing. The fry pan bottom tells you what's happening. So you have expectations coming out of a fry pan bottom. This is what we're looking for, is those huge price moves. Sean, same scenario. I use stochastics. My stochastics are 12.33. I'm a swing trader, so my trades are going to last anywhere from 2 to 10 trading days. But whatever indicator you want to put on, if it helps you, continue to use it. Remember, the basis for the accuracy of candlestick analysis is the pattern and the signals themselves. Whatever else you add on should be enhancing the probabilities that you're in the right direction at the right time. There's that slow curve breakout. Now we know what also happens after a big breakout. If it continues to trade positive, we have what we call a 45 degree. It kind of moves up in a steady angle. And we know what our thought, I read thought, any thoughts? KW, hold on to your individual ones until we get, until I tell Rick to do the double line. So these are all results where you don't have to be guessing what's happening. You have a much higher probability result by knowing what should happen coming out of a fry pan bottom. So here's RTRX also setting up as a fry pan bottom right now, right near the breakout level. So what do? You watch to see if there's a strong price move. Right now it's just the stock room and these. I think Pat and I discussed today whether we were going to do something that might do both rooms. So if you're signed up for the stocks room lifetime, we'll probably have a package for the people that already belong to do the options room at a discount price also. So there's the J-hook pattern on ironwood. There's your what we call the classic, which is a fry pan bottom followed by a J-hook pattern. Wolverine, there's your fry pan bottom. Now look for your J-hook pattern. The reason we call this the classic is you can see where the breakout is. You can see the expected strong price move. And that's what we expect coming out of a fry pan bottom. What do we expect for a J-hook pattern? Well, the prerequisite is a strong price move. Then you get ready for the next move, the J-hook pattern. End of a fry pan bottom? No, not necessarily, but it enhances the result. In this case, you can see where they gapped up through the 200, which is also the beginning of the fry pan bottom. Just gives you that much more clarity that that's where the breakout was occurring. So the J-hook pattern is very easy to recognize. Wave 1, wave 2, then it starts into wave 3. That could be the same magnitude. But what is even more refined is what we call the bobble pattern, which is a J-hook pattern that you can see where the resistance level was, and then you can see where the breakout is. Is that a consolidation with more expected? Yes. That's the whole point of, I'll have to come back to this one, that if this is our classic setup, notice the indecisive trading, indecisive, then a bullish engulfing. If they start trading this positive, then we have a classic. Whoops. Fry pan bottom, wave 1, J-hook pattern. If they start taking this back up, expect wave 3 to be the same magnitude as wave 1. What was I just doing? Oh, MD. So MD is a J-hook pattern, but with much more much more defined resistance. And if this opens positive, what do we have going? Wave 1, wave 3. J-hook looks like a handle of a fry pan. Okay. How much do you worry about earnings dates? Well, you look at what the price is doing going into the earnings. If they're announcing in the afternoon and they're selling off going into that earnings report, then probably want to get out, because usually it's the people in the know that are selling, knowing that they're heading into earnings that afternoon. So kind of anticipating, or they're anticipating what to expect. So there's your classic. Notice how your bobble breakout, J-hook pattern, now it's pulled back. If it opens positive, you got another J-hook pattern, which basically tells you this is in a good, strong uptrend. And here's another thing we'll be identifying as part of a strong reversal. If one doji means indecision, especially in the oversold area, get ready for a reversal. If a series of dojis means, or if one doji means indecision, a series of dojis means much greater indecision, which means when they break out, they've made their decision of which way they want to go. So J-hook pattern, if this one opens positive, what do you got? A J-hook pattern confirming. BRKR. Notice when it popped up or it pulled back, right smack dab to the T-line. Yep, so there's your J-hook. There's your J-hook setting up on MTZ. Spotify. There's your J-hook pattern setting up. What would be your upside potential? If this is wave 1, wave 3 could be substantial. So if you're buying on positive trading, what's your first target? Want to see what it does at this resistance level. If it resists there, what do you got? A double top. If it goes through, what do you have? The prospects of a J-hook pattern. What is wave 1 right here? Wave 1, just that first move, then a pullback, and now you're ready to go into, this is wave 2, now you're ready to go into wave 3. Okay, what are we doing here? Oh, TGTX. There's your classic. Fry pan bottom, strong price move. Now you have a little left-right combo, right smack dab off the T-line. And a doji, if it opens positive, what do you have going on? A doji sandwich. What do we infer from a doji sandwich? More upside, which means that's further confirmation that you're that you got more upside. On Spotify, well, if this moved from 120 to 155, 45 points, 45 points takes you up 195 or so. Now, will it get there? That's what the projection should be. And that would be your calculation if you were buying. But what is the ultimate sell signal or time to get out? It's the sell signal. So if this only goes up 20 points and then you get a sell signal, that's when you come out of the trade. Oh, we'll also be looking at things like the belt hold signal. Again, what the belt hold implies is they've taken out some sellers. Now, what would we want to see if we wanted to go long? We want to see it start trading positive tomorrow. So I'll try to go through these quickly because there's your belt hold on HTHT. If this starts trading positive, what's that belt hold signal tell you? Wave 1, wave 2, starting wave 3 of a J-hook pattern. We're in CWH because of the fry pan bottom, and look where the belt hold signal occurred, right here at the breakout level, implying more upside. TSEM, did we do this one? This one, if it starts trading, especially above this level, that's when you start buying. So there's just a very simple common sense confirmation. If this one starts trading positive, where do you think your first target's going to be? Probably back up into the existing trend channel. Wave 1, wave 2, wave 3. And unit. Why do I have this one over here? Oh, because of this little belt hold. This was looked bigger on the other charts. Have a belt hold, left-right combo in the oversold area. That starts your buying. So you're saying that every time, yeah, I'm just counting the waves. Xavier. Yeah. And you can see consolidation on the basis of, I'll have to find one, that it's not hard selling. It's usually indecisive selling that's causing the pullback. There's your belt hold, continuing that uptrend. Just, again, takes out a lot of the selling pressure, which means any buying from that point doesn't have as much sellers in the way. Everything that you learned from candlestick analysis, or everything I learned from candlestick analysis when I was first doing it, was based on everything I looked at and said, yes, that makes sense. So it's all just basically common sense built into your investment perspectives watching the signals. Yes, it is true. So if you can see there's going to be consolidation back to the T line, and you know that's going to eat up your option premiums, close out the trade. The nice thing about scanning for option or candlestick buy signals is every single day the simple scanning techniques will show we'll find 3, 5, 7, 10, 15, 20 good charts. So the process at that point is not finding the good charts, it's analyzing the good charts to see which ones of them are the best. So notice what this one did today. So you essentially have a wave 1, kind of a wave 2, now wave 3 that should be the same magnitude as this right here. And I often tell people this is not rocket science. This is just common sense, knowing what should happen after specific signals and patterns. We made a lot of money in this one, Goss, because of that belt hold. There's another belt hold on TVTY, implying there should be a lot more upside. And where did this all occur? Right here at a breakout level. Oh, I will find one, Will. That's the relevancy of knowing what each candlestick signal is demonstrating. Which one? Was it Spotify? Notice the nature of this pullback. I mean, that's strong buying. Big candle, big candle, big candle. That's indecisive, 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 indecisive. So you know the dojis, the hammers, the inverted hammers, that's all indecisive trading. So when they're pulling back and it's doing it indecisively, what's that kind of telling you? They aren't selling off very hard. Get ready for the next move, especially if it hits a support level. So what we'll be emphasizing is, there's your kicker signal on HROW. What's a kicker signal illustrate? A dramatic change of investor sentiment, usually a very strong results of more upside. HT. There's a kicker signal. High probability. If it opens positive, you want to be buying. The kicker signal is probably the strongest of the individual candlestick signals. There was our kicker signal in EVBG. What'd that tell us? There was a dramatic change of investor sentiment. Expect more upside. And you can kind of add the different patterns together. This is what we call a McMuffin. A McMuffin is a morning star signal. One of your 12 major signals. Now, the reason we call them 12 major signals, because out of the 50 or 60 candlestick signals in the candlestick universe, there is only 12 you really need to know. The rest of them don't occur often enough to spend mental time and energy trying to learn them. So there's our morning star signal. Where did it occur? Right smack dab on the 50-day moving average, in the oversold area. The Japanese rice traders make it very simple. If you see a buy signal in the oversold area, that's probably a reversal. Then it's followed by a doji sandwich. What's our expectation of after a doji sandwich? More upside. What's our expectation of a candlestick reversal signal? More upside. You add them together, that's just that much more confirmation that you're now in an uptrend. So what does that tell us about this pattern? Wave 1, wave 2, get ready for wave 3. Not really a scoop, nah. A scoop usually has a very identifiable flat handle before the scoop. Would you still wait for follow through after a kicker? If you're aggressive. Which ones were our kickers? If you're aggressive, and let's say you wake up and this is why we have the benefit of the chat room, because everybody recognizes what signals are setting up. But if somebody says, oh, look at HT, it gapped up, and I see that it's trading here after this, I know I've got a kicker signal I can be buying. Now, if I didn't see it on the day it was being formed, that night when I do my scans and I come across a kicker signal, I'm getting ready. If it opens positive the next day, I want to be a buyer. Okay, a few others that look good. There's your fry pan bottom breakout. Notice how it came up, and this is another thing that we can identify very easily. Usually when they come up through a resistance level, they'll test it to see if it's going to act as support. And when it does, which we can see, you see the consolidation. This is what we call a double doji setup. Doji, doji. What's that tell us about our profit taking? It's not very aggressive. Then if it opens positive the next day, we can be buying because we pretty well know that profit taking's over. And if it's buying on that day, what did it tell us about our 50-day moving average? Told us it was acting as support. You can be buying this, anticipating more upside. KDMN, doji, doji, more upside, breakout, gap up. On KBH, would you have bought on the positive day after the morning star, or wait until? I could have if I was following it. I might have, well, I might have waited to see if it was going to close above the T line, because that's my final criteria. Now, if something is way down here and does a Morningstar signal, and the T line's way up here, yes, I can be buying it with the anticipation my next move is up to the T line. But if I'm that close to the T line after a buy signal, it's much more higher probability confirmation that I want to be buying on this day, because now I know I've got a bullish doji sandwich following my Morningstar signal or a McMuffin setup, and it's closing above the T line, which implies I can still be buying this one. On the day after the doji open lower, so would we close the trade? No, because where are your stochastics? They're just coming out of the oversold, heading up. So it opens slightly lower. We aren't in it yet, so we wouldn't have been coming out of it. The double doji. Oh, what was that on? 2 symbols back. On BE. Oh, right here. No, the double doji, was it doing a confirmed sell signal? Not really. And we're sitting right here on the 50, so what do we want? And look where our stochastics are. They're coming up out of a fry pan bottom. Yeah, if this had closed down here below the 50 in the T line, yes, I would have closed it out. But it was just kind of doing indecisive. Slow, yes, 12.33. No, usually a doji is not going to have any color of a candle. Remember, doji is usually illustrated by a very small space between where it opened and it closed. Up here, I would have probably still have given it time because we're not that far away from the T line. So at this point, I want to see a sell signal and a close below the T line. If you hold on to a position, use the T line as your stop. Here's kind of your scoop pattern. Look how flat this trading is. Then you have your scoop, and then notice what we have down here. There's kind of your cradle pattern. Big down day, indecision, indecision, indecision. Then your left-right combo. And what did your left-right combo do? Not only did it create a left-right combo, confirming your cradle pattern, but it closed above the T line. Now you have the big gap up, apparently because of earnings. Now, if you weren't in this and you wanted to get in it, where would be the logical place to get in? If it comes back up through today's open, that tells you the profit taking's over. Can we kind of estimate that this has consolidated? Yeah, look where it consolidated to, right back to the 50. How come I have that under scoop? Oh, no, not scoop. Notice your J-hook pattern, and it did this. Where would you want to be buying this one? If it comes back up or starts trading positive tomorrow. A few more, let's see, apps. There's your double doji. So it sold off, but it just broke out, and you're in a fry pan bottom. So there was one basic rule of a fry pan bottom. You stay long unless you see it close below the T line. As long as you're in a fry pan bottom setup, you can stay long. Now, if this opens positive tomorrow, what do you got going on? Your double doji setup, you could be buying immediately. So that's how we use the setups to get us in at the appropriate time. This told us if it started trading positive on this day, you wanted to start buying because it would be breaking out. PTCT, very simple. If this opens positive tomorrow, doing a doji sandwich breakout, J-hook pattern, you want to be buying immediately. So what it allows us to get set up for, oops, I forgot this one. That if we're right at a level that everybody else can see, there's your resistance level. There's your bullish engulfing. Bullish engulfing. Use the T line, or I'm sorry, the 50 as a support level. Close above the T line. Now you're at the resistance level. If it opens positive, what do you think everybody that's watching that resistance level is going to do? They're going to start piling in once they see it's up there. We know that if it opens positive, we can be buying immediately. Now, the probabilities of that trade working is extremely good, but the qualifying word is probabilities. So if it opened here, traded up, and then closed back down here, what do you want to do? You want to close out the position, because the whole point of buying it was because of the breakout. If it closes back here, it didn't break out, you close out the position. And that's another aspect that we can utilize of cutting our losses short and letting our profits run. Most investment advisors profess that, but they don't tell you how to do it. So today we were going to buy PLNT. Had it opened positive, it opened and traded lower. There was our message. There's our uptrend. Today, does that take us out of the picture? No. If it comes back up through this level, we know that we probably have a 45-degree in progress. So essentially what we are allowed or able to do, find the spots that tell you the pattern is working and we have a high probability entry point. If you bought CPRT when it goes above today's high, at what point would you dump it to get out? Very simple. If you're buying based upon a candlestick buy signal, you close it based upon a candlestick sell signal. AVTR. If this opens positive, what can you expect? A lot more upside. You're coming out of a fry pan bottom, J-hook pattern. So the reason you're seeing so many patterns is there's these patterns every single day. If you're using our different packages, and I can scan every day for the best friend signal using our TOS scanning or our best friends or the kicker signal. So here's our entry strategies. If this opens positive tomorrow, what do we got going on? First of all, we got the doji rule. It says if it opens positive, it's likely going to trade positive. If it's likely going to trade positive, it's probably going to do a doji sandwich, the same magnitude move as this. If it does that, what's it tell us about our breakout level? It's broken out. We're into wave 3. AXSM. Started buying this down here off the cradle pattern. Now look what it's done. A hammer signal right smack dab on the 50, followed by a bullish engulfing back up above the T-line. Where is it right now? At a level that if it opens positive, wave 1, wave 2, wave 3. And LKQ was one that we were going to buy. Now, I jumped the gun and I bought some right here with the expectation it was going to trade higher. Closed it out here. Or we recommended a buy if it opened positive. Well, this is what the logical aspects of candlestick analysis does for you, it kept you out of this bad trade. We did those. AEIS. This is either a message or a bearish belt hold. Now the difference is usually a message will close well above where it opened. This usually tells you that's the end of your uptrend. Walmart opened up here, closed down here. That's not a good sign. If you are long Walmart and it opens lower tomorrow, you close it out. It has to open positive and trade positive to stay in it. Okay, let's see. All right, so I know that was a long kind of education on different signals or patterns, but the 2-day training is exactly why we've set this up like this for years. Is that if you understand the basics of the signals and patterns, then you can start taking advantage of the what we call the top rank signals and patterns, because you understand what strength is coming in and what the probabilities are of finishing out that price move. So, Becky, do you have? I put in the one for the members. Do you have the link for the non-members? And the reason that you want to do this is once you go through one of these training sessions, everything we see when we do these type of sessions now does not become a learning session where you have to kind of figure out why it's working and how you could use it or whether you're going to remember it. Once you've seen them all in a chronological order and understand the logic of it, now you've got the process where you're reconfirming or you're confirming what you've learned, and it makes it more solid. It starts on Saturday at 9:30. We're supposed to end around 3, but usually it goes to 4, maybe sometimes even 5, depending on how many questions. And then the same thing Sunday, 9:30 to sometime mid to late afternoon. So it's the type of thing where I always say you just come in with your pajamas and your coffee and just hang around all day. You're going to get much more education out of it than what the price is, because I load everything I know into those 2 days. If it opens positive tomorrow, opens up here, where's your logical stop? At where it closed, because logic says if it opens here and starts trading down, what are you seeing? You're seeing that red candle selling. That means they're not back in there yet. Close out the position. Okay, there you go, Margaret. Yep. So, and then, yeah, that Margaret's kind of illustrating that if you pay for your first session, you can come back every time we do it after that for free. Okay, so is there any general questions on candlesticks? All right, Rick, go ahead and do the double line. There you go. Okay. Marvell, you should have closed out today. You're in the overbought area. And it looks like I'm colorblind. Yeah, they gapped it down. So they were doing a bearish kicker signal and closing below the T line. Should have closed it out. When you see a bearish kicker signal in the overbought area, that pretty much tells you the bears are now taking control. Whoops, I didn't even look. Let's see. Would you go short on Walmart? No. Walmart doesn't move around enough. Walmart is not a trader. There's not enough price movement in it to make any great money with it. Costco, this one you get ready to buy, especially if it breaks out through this level. If this opens positive tomorrow, you've got the bullish doji sandwich setup. IQ stays short. There was your bearish Harami. And why was this significant? Because they closed it right below the 200 in the overbought area the previous day. It needed to open positive to stay long. When it opened lower, that was time to close out the position. The Mexican, there's a left-right combo right smack dab on the 50 and up through the 200 and up through the 50. You can buy this if you want. Then you just watch to see what happens once it gets to the T line. SCHD. You can stay long on this. I would have my safety stop just below today's low. It shouldn't come back down through there. NTAP. Stay long. Where do most people buy? They buy exuberantly at the top. So you want to be careful. I'd have a sell stop just below the 200, just as a safety stop. Gold. Oh, we don't need to need gold. Gold starting back up. This is December gold. You can see it's coming up a little bit. AER. Getting a little bit dicey. Notice all the tails to the upside. Doji right on the T line. It has to open positive to stay in it. If you're long, put your safety stop just below today's low. It shouldn't come back through that direction. If it does, it's moving in the direction of how they open it after a doji, which means they're trading lower. Boeing, you can get ready to buy this if it comes up through the 200-day moving average. Pause, you stay long. One of the silver, you can see the fry pan bottom. Make it a little bit smaller. I would suspect your next target is right up in here. Mio, stay long, but it has to open positive. If it opens lower, close it out. It's lost its trajectory. SY, same scenario. It needs to open positive. See your fry pan bottom. Now you need to look for a J-hook pattern. EPHE, the Philippines. That'd be a toughie. These are toughy to trade when they're ETFs that are traded overseas. Right now, you stay short, so all you can really use, because these are not going to be true signals, all you can really do is use the T-line to tell you which direction things are moving. We did DVAX. If this opens positive, your J-hook pattern is working. Hershey, another one that doesn't move it around very much because of it being an institutional trader. But if it opens positive, at least you can calculate they're coming up to fill this little gap, which would also correspond with trying to hit the 50-day moving average. GDX, slowly coming up. Probably something I wouldn't trade just yet because you're still kind of in this channel. So right now, golds are kind of moving sideways. Freeport, get ready to short this one if it opens lower tomorrow. with your expectation now coming back after failing the 50, failing the 200, coming back to test the 50. Micron, wouldn't trade this. It's in a wedge sideways. I'd be someplace else. NVIDIA, you can stay long, but I'd use my safety stop or put my safety stop at today's open. Apple, traded off a little bit today, but you're still above the T line. You just stay with it. Papa John's, bearish engulfing. So this is why, notice you had a bearish harami. Tried to take it up, now you have a bearish engulfing in the overbought area. So you're starting to see sell signals in the overbought area. I'd have a safety stop if I was long just below today's low, because logic says if you've got a bearish engulfing and they open it, start trading lower, the sellers have taken control. CVET was a good one for us. Again, there's that slow curve breakout. I'd stay long. So the one aspect that I didn't point out is years ago when I was a stockbroker, the market would be going up and my clients' portfolios would go up a little bit. That's because 65% of their trades would be going up, 35% would be going down. And they didn't want to sell the ones that were going down because it was in an uptrend and maybe they would turn around and start going up. Well, that's the completely wrong perspective of investing. If it's going down, you close it out and you move it, because now we've got the scanning capabilities to find good trades. So I kind of expect 7 or 8 of my trades to be moving positive. One might be flat and one might be going in the wrong direction. But even though it might be going in the wrong direction, it's still may not be a sell signal. So the profitability becomes much better because now you have a way to be in much more profitable trades just based upon knowing what should happen after each candlestick signal. AON, you can be buying this one. Walgreens, it's an institutional trader, but right now I would have a safety stop just below the T line. Right now you're in an uptrend as long as you don't see a sell signal and a close below the T line. Coop, nothing yet. You can see you're kind of in a wedge. I'd want to see a strong move up through the 50, telling you you've broken out through this little wedge formation. And ZS, kind of a fry pan bottom. Probably not anything real exciting until you probably get through the 50. So when I say it's nothing real exciting, there's too many other charts out there that have very compelling either bullish or bearish charts. If you've got one that's not moving very well, close it out and move on to something better. Every time you cultivate that process, you're improving your probabilities dramatically. And another thing that we'll be going through is how that process of evaluating which is your better trade setups greatly diminishes your emotional trading decisions. And the reason I'm so good at that is because I was the worst investor in the world. IQ, you stay short. So everything that I've developed using candlestick analysis is how do I keep my crappy emotional decision-making process out of my trading. Bud, nothing. Wouldn't be long or short. Just nothing there right now. We did Hershey. American Tower. You can be buying this one. First target. Didn't we do Nike? Nike, you can be buying on positive trading your bullish doji sandwich. Just Energy, another one you can be buying. Notice your kind of your little J-hook pattern. The worst case scenario will be wave 1, wave 2, wave 3, but hopefully you get a little bit more powerful one with the kicker signal off the 50. So you can be buying this one if it breaks out through that level. Xavier, email abraham@candlestickforum.com. We can get you set up. What do we got here? ABR, Arbor Realty Trust. Another one where it's consolidated. There's your hanging man. Open lower, that's where you were taking your profits. Now you were waiting to see whether it was going to support at the T line. So if this starts trading positive, you can be buying it and then use the T line as your stop. Cree, stay short. Now, if you're short, you can see you might be in a trend channel. So if it opens positive, I'd close out the short position. If it opens lower, giving you a bearish doji sandwich, you stay short. Herbalife. This one, same scenario. If it opens lower, this is the benefit of the doji rule, knowing that it's going to move in the direction how they open it after a doji. You can see the bearish left-right combo failure right here at the 200. So that's what I say is observe the obvious. If you see a candlestick sell signal right at a resistance level everybody else is watching, get ready to take profits. Now, kind of if it's selling off tomorrow, expect your next target to be down here at the 50, which would be filling that gap. Shake, 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 shake. AOE you can be buying, kind of trying to get through this level with a slow curve. Oh, I haven't gone through them yet. Here's one that's got a good J-hook prospect to it, TGTX, and we started buying DXC today because of the fry pan bottom breakout. Now the bullish confirmation, expecting a lot more upside. How many times during the trading day are you in the chat room? I usually come into the options chat room around 11:20. So what we do is I put out 2 or 3 stock picks every night, and then during the market open, I won't come in unless there's something real dramatic going on. But we'll put text. Everybody can text each other using the chat room. And then around 11:50, 12:10, somewhere around that, I'll come in for about an hour, and then I'll come back in near the end of the day. And I'm always watching the chat room because I'm sitting here doing all my other stuff. So if somebody has a question, they just type it in, and I'm usually can answer it. And if it's going to be a long answer, I'll just turn on the microphone. You could call it a scoop, or you could call you could call it a scoop, but it doesn't really matter. You can see what the result is is that they bounced right off the 50 with a kicker signal and then followed it with a doji sandwich. That's got all the implications that the bulls are in control. And grub, you could be buying this one on positive trading. That's why if you're buying down here, your first target is to see what it does once it gets to the T line. So you do this live. Yeah, during the day, yeah, I come in for an hour or two. Roy, this is why I try to teach people how to get ready. That's why I put the stock picks out the night before. So the normal process should be, if you know what the entry strategy is, meaning you want to see it open positive. That's the second thing. The first thing is, if you're ready to buy a trade, the first thing we want to see is what the pre-market futures are doing. Just everything that we do is just merely common sense. If we're ready to buy and it's showing the pre-market futures that the Dow is going to open down 140 points, well, it's probably not a good day to be buying. If the market looks like it's opening up 40 points and the stock we've already analyzed from when I put out the picks at night, they're usually on about a 2-minute video saying, here's what we expect the market to do, and here's what you want to be looking at buying, and here's the price you want to be buying. Usually I'm buying into strength, meaning I want to see things open. If I'm buying, I want to see things opening positive, confirming the buy signals. So now you're getting in based upon your analysis. I'm not trying to give people stock picks. I'm trying to educate people on what they should be looking for, so that if I ever get run over by a Mack truck, which will probably take a Mack truck to do that, that you understand what your picks are on your own. Yelp, nothing there. That's just not a good looking chart. Now, notice what happened. You had a kicker signal, but then you started getting your sell signals. Remember, even though this is your strongest reversal signal, you still have to pay attention to what the latest signal is. So I would have closed this one out today. ASC. Here's your Morningstar signal, starting with a left-right combo. It's having a hard time breaking out. So if it starts trading lower, you close it out and wait for the next buy signal. Okay, I guess that's about it. I kept everybody overtime. So if you haven't taken the training, I can pretty much guarantee you when you're done with it, you will start, and this is from my own perspective, that you will start looking at trade setups with a completely different point of view. You don't have to wait for somebody to give you picks. The most important aspect is knowing what to expect after a signal or pattern and being ready for it. So you don't have to wait for somebody to give you a pick which after the price has already moved. Now, if you're getting the morning comments, it's usually kind of confirming what, or this morning we had a couple that didn't execute. So in the morning comments, it would have said you don't want to be buying XYZ until it comes back up to yesterday's close. So everything we try to do is to teach people how to analyze for themselves, because there's a lot of times where I'll put out 2 or 3 stock picks and maybe they don't execute. So instead of sitting there stuck, if you've done your own scan and your own analysis, you may have 2, 3 others that you can go to that are trading like they should. All right, everybody, we will see you bright and early in the chat rooms tomorrow. Oh, good, Carl. All right.